Hello investors, thank you so much for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about Oracle's Q3 results. They reported last night, Q3 2022. So I'm going to go through that and just talk about the fact that the initial reaction was that the stock sold off as tech has been selling off, but investors started to understand, this actually is a profitable business, and yeah, it's not the most exciting in terms of top line revenue growth rates, but on the bottom line profitability, there's a lot here to be compelled about this business. And so the stock kind of picked back up again. And I'm starting to believe that, while growth has dramatically just sold off and investors have nothing to do with growth stocks, it could be the case that maybe, perhaps, don't know yet, but value investing hasn't quite died. So, this is the thing, right? So in the past, let's say 3 months, many stocks have sold off. Okay, tech has seen many growth names go off by 50%, some even 80%. Okay, in that context, Oracle's actually done quite well. It's only down 15%. And if you think about it, right, I believe that this is very much to do with investors thinking that, okay, profits do matter. And yeah, if it's not the most exciting on the top line, I'm quite excited about businesses that make strong cash flows right now, right today. So along these lines, they put out their guidance for Q4 2022 to be up approximately 5%. So this is on a reported basis. It doesn't adjust for it does adjust, sorry, for the headwinds in currency of 2%. So on a, let's say, non-GAAP revenue basis, it was probably up about 7% for Q4. But remember that Q4 of last year was particularly strong. So coming up against that, it's a reasonably strong result. Also, this doesn't make any adjustment for the acquisition of Cerna. I'm hoping I'm pronouncing that right. That is going to complete at some point in either this quarter or jumping into next quarter. So there's a lot here to be excited about, ultimately. Now, so Oracle is a software maker, and during its earnings call, we heard a lot about how Oracle is migrating over into its healthcare opportunity. We hear about how Oracle's enterprise resource planning and human capital management platforms are embracing the healthcare market. Larry Ellison's he's always quite bullish, and he talks about several companies, predominantly Kronos, how Oracle has displaced Kronos in one hospital, and talking about how healthcare is much more than just patients. You have to have a system that tracks who's getting recruited, on what schedule, who's getting paid, and that doctors are going to different hospital bases. So all this is laying down the foundation for its acquisition of Cerna, which may or may not complete in this quarter. So, but Oracle's being open about the fact that as soon as it completes the acquisition, the business will be immediately accretive to Oracle's financials. So here's a highlight, one of the quotes from Ellison's Oracle's founder, Larry Ellison. He talks about that we're going after the entire integrated ecosystem in healthcare, and we're having great results. Obviously, this has influenced our decision to buy Cerna. So essentially, it's pretty much what he's done. All his period is always kind of very bullish. But I think that the market is rewarding this story. I think that the investors are kind of saying, healthcare is due some meaningful disruption. And Ellison goes on to talk about how the fact that it's much more than just patients. There's medical devices manufacturers, pharma companies, insurance companies, government agencies. These are just some of the things that are needing a very strong ERP platform. So when you get to entrenched as the leading enterprise in healthcare for servicing healthcare providers, if it just becomes okay. A lot of companies look towards that and say, okay, if you're providing the human capital management platform for this hospital, then why not try it with us? And it becomes a kind of virtuous circle. And the one thing that investors particularly like about Oracle is that it makes a lot of cash flows up front. So for the trailing 9 months, non-GAAP EPS was 3.37, which is up 7% from the same period a year ago. And the guidance for Q4 is pointing to $1.44. Now, that $1.44 is down slightly, is expected to be down slightly, approximately 6% year over year. But Oracle was stating to invest that the drop that they're expecting for Q4 is really coming down to the change in the portfolio, because the portfolio had a lot of gains in its investments last year, and as those share prices have compressed, it's really caused a headwind to the EPS number this upcoming quarter. But it's masking the strong performance of Oracle's cloud business. So in that context, investors very much value the core business performing strongly. They're not that caring about how the portfolio is doing. They care about how the underlying core business is doing. And if the underlying core business is strong, investors are going to reward that quite significantly. Now, here's some back of the envelope calculations, okay? Let's say we know the guidance for a non-GAAP EPS for this year, which is going to be approximately 481, okay? So if we take that non-GAAP EPS number and we kind of say, okay, Oracle's bottom line grows approximately, let's say, a high single digits into next year, this implies that going into next year, we're looking at $5.20, okay? So at $5.20, that puts a stock price at approximately 15x next year's earnings. So at 15 times next year's earnings, it's not like many of these kind of cloud businesses that are priced at, let's say, 8 or 16 times forward sales, with absolutely no path to profitability. In the case of Oracle, they are actually making strong cash flow. So just to give you some context, right? Many tech businesses, the bulk of their free cash flow is basically stock-based compensation that gets added back. And that's going to be a real cash expense because a lot of those share prices have fallen. So a lot of that equity that's been diluted out, has not a lot of value. So management teams are going to have to try and bolster up that non-stock based compensation with actual cash expenses. In the case of Oracle, only a third of the cash flows that it made in the past 9 months have actually been from stock-based compensation. The rest, 2/3 of that is actually organic cash flows. So all that considered, I think that investors are saying, okay, I'm going to move towards where there's actually more value. And along those lines, I think that investors are thinking to themselves, okay, businesses that are not really growing that strongly, but are making a lot of cash flows right now, and a price like Oracle, approximately 16 times next year's earnings, probably worthwhile considering. But if you want to find out what kind of names I'm buying right now, I'm migrating to another part of the market overall. I think that there's even better opportunity there. Businesses that are growing and making a lot of free cash flow right now, and very strong balance sheets. So if you want to find out some of those names, don't forget to check out our marketplace right there above the screen. Deep value returns. I highlight for you high quality, actionable investment insights. Okay, thank you so much for listening. See you next time. Bye bye.